Grubhub, DoorDash, Uber Eats, and more, all competing to deliver restaurant food to shut-in consumers. So restaurant owners like Desmond Riley of Chicken and Whiskey in D.C. are ecstatic, right?
The price that we pay to these services to make this happen, it takes all of our profits. These numbers are anywhere from 22 to 30%, depending on the provider. There's really minimal left over for us. So you could mathematically put yourself out of business if you only had a delivery service and you had no walk-in, sit-down traffic in your restaurants.
Chef owner of the high-end D.C. restaurant Chiquette, Danny Yadeau, actually stopped using the services entirely.
Right now, we're the ones that are delivering. I've delivered quite a bit. One of my employees has a car. But essentially, the other apps weren't really doing anything in terms of marketing for us.
So, not great for restaurants. But don't these apps at least provide work to delivery drivers during the jobless pandemic? We met Mustafa Mukled last year, driving for Uber in San Francisco. But now,
there is not that much people requesting Uber since everyone just staying at home. And the only thing that is more busy is just food delivery.
So he switched. The pay, however,
it's like half of what we used to make. So after expenses, your hour might be somewhere between $5 to $10 an hour. And that in a city like San Francisco doesn't even cover living expenses.
Now wait, unhappy restaurants, unhappy workers. Okay, but how about the customers?
I have very mixed feelings about it. Usually the only reason that we would use Uber Eats is if there's some sort of discount or promotion.
I think we'll sort of get away from the apps again and just start going out either to pick up directly or to actually go and sit and enjoy.
Well, but some group must unequivocally benefit from this industry. It's investors.
We should start by acknowledging that today Uber Eats does not make money.
Janelle Salinave is head of Uber Eats.
We've been very public about the fact that it's not yet profitable.
And neither are her competitors.
The platforms themselves lose a ton of money in the hundreds of millions of dollars, billions collectively.
Ranjan Roy writes a tech industry blog. Count him a skeptic.
Customers complain if the fees get too high, and the drivers and couriers are underpaid gig labor.
Which raised the question that motivated this story, which I put to investor Vitaly Katzenelson.
Why does this business even make sense?
I'm not sure it does. And I think they're still trying to figure out how to make money at this, even today.
That is, after years of trying in a market that just doesn't get any better than this. But then how could venture capitalists have poured in $1 billion, I asked Ranjan Roy.
Everyone's searching for yield in some capacity and trying to find any opportunity they can.
What Roy means is that with historically low interest rates for years now, those with money have been desperate for higher returns. Veteran venture capitalist Randy Commissar has seen it firsthand.
Finding opportunities to invest large checks in potentially big outcomes has outweighed the ability for us to sort of discern good from bad returns on capital.
So there's too much money chasing too few opportunities.
In a nutshell, that's it.
So back to the basic question one last time. Is there any hope for these firms?
These companies have to consolidate.
Whittle the industry to a single player or two, says investor Vitaly Katzenelson, which is presumably why Grubhub sold itself to the Dutch food delivery company Just Eat Takeaway 2 weeks ago. And as for the remaining players, they're offering ever steeper discounts to lure customers and run the weaker firms off the track.